Good morning, Nick Inman here from VolumeProfileTrader.com. Currently 1 hour into the trading session, and what I'm looking at is the fact that the euro is holding these levels still, and maybe the potential for a trade off of these levels, which would help ignite the market higher, the S&P, that is. And what we're seeing here is on a 1-year chart, 52 weeks, we've had this let's call it 130. This level has been very important in terms of support. We broke down through that level once, and it was immediate snapback back to hold those levels. So that's an important development. That's something that you want to be aware of. I pull up a 2-hour 90-day chart just to show you what's kind of going on in terms of intraday. And what I'm seeing here is not that, but the last 2 months, the euro point of control for both months at the bottom end of the range, and now we're trying what looks like to make some type of U-turn bottom off of that range, or off of these important lows. And not only are we above April's point of control, we are above one of April's other extremely high volume points, which could become point of control. We're above March's point of control, which kind of leads you to above this entire point of control for the last 90 days. Now what we need to see is a breakout above 131.68 on the euro, and that should lead to a push higher in the euro back to the swing highs we saw late March, early April. So that's kind of what you're looking for, and the way the market is trading right now, we have pretty decent volume to the upside here, and as long as we stay above these levels, let's say between 131.40 and 131.60, this has a real potential to make a move higher. Bringing up some hourly volume profile charts on a 30-day chart, what you can see, hourly, I meant weekly profiles. This is the emphasis. We're talking about the 169 level, 3169. That was basically the high before we flushed down, and that's kind of the level we're trading off of. However, we've already started to see momentum in the euro turn up, so we could see a potential follow through. But you can see if we do get above that level in the euro, I don't know why I'm saying we. If the euro gets above that level, then we should push up back towards 133. All right, the dollar maybe looking like it's forming a lower high here, which goes on with 2 lower highs actually, which could be a major sell for the dollar. If I just kind of connect the lows, connect the highs, you can see we're in some type of triangle here. And trading off of that high, the dollar would need to turn around fairly soon with basically, I'd say, off the 50-day moving average, just to kind of give you a sense of some type of reference point. But what you're seeing here is 2 months in a row, prices rejecting this high volume area, and if that continues, and it kind of looks like it's going to, just for how price action is today, we should go test 79.42 or so, 43 on the dollar, which really isn't that far away. Let's just call it 79.50, 79.51, that range in general. Basically what I'm looking at is on this 2-hour chart, after this huge up bar, the consolidation bar right after that, which then led to new highs. I want that low in a level to watch, and it looks like we're going to go down and test that. So we're just going to have to wait and see. If we don't, and the dollar recaptures these levels, then I'm wrong. But you'd have to see the dollar basically break. And bear with me for 1 second. Break the trend line here, this downtrend resistance, and start to push up towards new highs. This is where it gets really interesting, and this is why I've kind of been nibbling on the market. This morning, not only in S&P futures, but I bought some Tech Resources, some Medifast MED, and just looking for the market to continue higher off these levels. I think we may be at a really tradable low, and that's what kind of matters, right? So a new development that's occurred is the point of control has shifted from 1393 or so down to this 1364, 1367 level, and that was my premises for getting long, is we're getting a bounce off of this 1355 level, which 1350 was close to the low. The 1355 is, here, let me show you. Okay, this 1357 level or so, bottom of this high volume area, 1348, let's call it 1350 to make it easy. So we basically started to penetrate and then it rejected. Now we're seeing a bounce through. We're probably going to go test the top of this high volume area. It's also the bottom end of this range, so you look for some selling pressure at 1371 or so on the S&P. Guess what? We're a point away from there. So we see if the buyers are going to fade or the sellers are going to fade into this. Let me show you the volume chart right now, so you can see what's going on. You can see long from 1367.50 right now. But we're, this was the only weakness that we've had. You can see looking at the bottom, this is the amount of aggressive buyers or sellers. We're starting to see some, the continuation of aggressive buyers come in since these lows, and that's just something worth noting. And we're above the point of control intraday, which is good. So what you're seeing here is the market trying to push up above these levels, and we're going to have to see if it does so, and if it does so successfully. But the point is, really, as long as we hold these intraday lows, we can penetrate them some. Want to see it hold 1364 or so. As long as we do that, I think the potential to retest this, call it 1400 level, is very real, and we could see it really by the end of the week. One thing to note is the point of control for the week is still up at the top end of the range, so 1374 to 1378 or so. In my opinion, that's actually where my limit is to take off the last of this trade, is around 1374, kind of right below that. If we start to falter here, I may take the trade off now, but I want to give this an opportunity, because what we have the potential for is one complete rejection. If we get back above 1374, this market, I'm sure, is going to go up and test let's call it 1400. So I do think that there's a real opportunity that the market has bottomed short term, and you could see more potential upside, and it could be a real tradable bounce, like 3% or so. So it's going to be worth noting. Tech Resources started nibbling in this morning. My stop is below yesterday's intraday low. If it gets below there, whatever. I'm taking a cheap shot, or what I perceive as a cheap shot, in Tech Resources. I was very impressed that it held yesterday's low. Or I should say it closed positive on the day yesterday. Kind of gives it a mini double bottom here. The top of this range is around 37. That's 4% or so. That's not too bad. However, your risk is about the same, and you'd be looking for it to occur really by the end of the week as far as that move. But if you kind of zoom out, sure, these moving averages, these big moving averages, 150 and 200, are without a doubt moving down, and I see the trend is clearly down when you're looking at these. But what has it really done in the last 6 months or so? In my opinion, the way I look at it, is we've just been in a trading range with one pierce through the bottom. And really this, let's call it 31 just to make it easy, has held on the bottom, and 44 has been stubborn resistance on the top. We have point of control at the bottom end of the range. That should bode well for a potential move higher. However, you remember Alpha Natural Resources, we kind of thought the same thing, and it rolled over. The only difference right now we're seeing is Teck Resources, though it has lower highs immediately. Let me get the rate tool. We do have lower highs, so I guess that is the most important thing in terms of creating a larger position. But we have successfully tested 43 every couple months or so, and we are, destined to move one way or the other from this range. And if we do start to break below these lows, then perhaps we have a trade back down to 26, 25. But until then, we can go off of these lows for now and kind of let it do what it's going to do. Now, if Teck Resources closes poorly today, I'll probably close out the position. XLF is bouncing off its point of control for the year, something worth noting. Medifast up pretty big today. It looks like the volume's extremely light. It's kind of hard to tell when it only trades a 250,000 shares or so. It's up to around 60,000 or so right now, but it continues to make higher highs, higher lows intraday. That's what we want to see, and I just kind of keep buying every day and kind of going from there. My position is a decent size, cost basis below 18, I believe. No, just above 18. So my apologies there. So if you want to look at pot, as far as potash, your stop would go below 42. Pretty decent risk reward. You would look for a trade up back towards the mid to high 40s. We're going to have to wait and see. But the point is, you're getting close to a tradable bounce on potash. Just like you are, let's see, Caterpillar, similar situation. You're getting, we're getting our bounce today. But the question is, do you really want to pile into the market here? If you already have exposure to the long side at these levels, maybe it doesn't make a lot of sense to continue to pile on. We still are in a short-term downtrend here. When has it in the past? Say 2 months, really, since we've topped out on Caterpillar. When has it been profitable to buy on the first positive day? It worked. It worked on the 7th. We had a pretty good bounce, a very good tradable bounce. On the 23rd, it worked for 1 day and rolled over. Unless if you were quick and sold on the 1 or 2 days you had, you probably took a loss on the position. On the 29th, you may have gotten in again. However, this big down bar may have scared you a little bit. Maybe you thought, hey, we just kind of pierced, and now we closed back above those levels. Maybe we have a trade. Well, if you took it, you had, a 3-day move to the upside. You had probably 4 days to get out of the trade before it made new lows. So here again, what do you really have? You still are within yesterday's range, and that's something worth noting. So yes, Caterpillar is up 1.5% today, but is this something you really want to be getting involved with before seeing more information? That kind of goes, and my apologies for not noticing this, with the S&P. You're still within yesterday's range, so it's worth noting. However, if you trade high volume area to high volume area, your trade could end at 1372, which is the top of a 30-day high volume area, but the weekly goes up to 1377 or so. So anyways, I'm going to stop this. Kind of went further than I wanted to. But looks like the market, if you caught it this morning, your reason for catching it may be a little different than mine. However, we did talk about an oversold bounce. Just go with what you think is going to work. And if you think the S&P is going to go another 10 points higher, and buy S&P futures and know where your risk is, and make sure that your risk reward is at least 10 points. Or I'm sorry, a 2 to 1. Take care, have a good morning, have a good evening, and I will talk to you later on this evening.